of the Institute. I wish to welcome everyone for our 34th discussion series, a talk on IBF. So before I proceed, just one announcement to inform that we have now the appointment of new dean, which Professor Dr. Ibrahim, formerly from our accounting department, is now the new dean, replacing Dato Mohamed Azmi, who is now will be attached to the IRT, or the what do you call it, in Jeddah, effective in February. Okay. So before I start this series, I would like to introduce the MC for today. She's Dr. Rusni. Dr. Rusni is attached to our ICOR, and she's also the member of the Shirah panel of Bank Negara. So I would like to introduce now Dr. Rusni to introduce the speaker.
Assalamualaikum warahmatullahi ta'ala wabarakatuh, and a very good afternoon to everyone. So Alhamdulillah, we are here today to listen to from the two distinguished speakers on a very interesting topic, very much legal actually, the topic on Sukuk, specifically on the legal and beneficial ownership of the underlying assets in Sukuk issuance. The issue which has been discussed, debated, commented, criticized, argued and whatnot, long-standing issues which may be partially resolved, but still there are a few things that still unresolved, I believe, right? So it needs the creativity of the legal practitioners, basically, when we talk about this issue in Sukuk. We have in front of us, here, two distinguished speakers from the same firm, Zaid Ibrahim and Company, the company that I think need not further introduction because their active contributions to the Islamic financial sectors, particularly on the legal advice and whatnot. So the first one is Dr. Norzrul Thani. Yeah? Which he's the chairman and senior partner of Zico, and then Zico is the largest law firm and offices in Singapore, Bangkok, Dubai, Australia, Jakarta and Vietnam. Okay, and then he was with prior to Zico, Dato Dr. Nick was with Baker and McKenzie International. And then he was with IUM before as a dean, and also a visiting scholar at Harvard Law School. And he authored few books, one on the legal aspects of Malaysian financial system, and another one is the law and practice of Islamic banking, and now is finishing his another book, I believe, on law and practice of Islamic and conventional investment and corporate finance, having the degree PhD in law from the schools of from SOAS. Okay, and our second speaker is Mr. Madzlan Hussain, who is the partner in Zico. Based on the brief profile here. He handled many things, I believe, on the regulatory advices on what we call it legal aspect on Islamic financial service, prudential and regulatory framework. Engagement include advising financial institutions in Malaysia on legal and regulatory compliances, on the operation standardization. He was in FSB, and now he's a partner in Zico. Okay, both of our speakers today have an extensive experience, practical experience on how to resolve issues pertaining to legal aspects. And today, both of them will be discussing on the very specific issue on legal and beneficial ownership. So without further ado, I would like to welcome the first one, Dato, Dr. Nick.
Thank you, Dr. Rusni, and welcome everyone, and Dr. Azmi, Dr. Rahim. I know that this is one of the last few weeks for Professor Dr. Azmi is going to Jeddah soon, so hopefully when we go to Umrah we can visit Dr. Azmi for Umrah. And we know that our office is just nearby actually, but we seldom come here except for official reasons, so it's nice to be here again. And to be called upon to speak on a Friday afternoon after Salat Jumaat is quite a challenge. So when we were discussing the topic, we are trying our best to make it as practical as possible. So some of the issues we raised, we're going to glide through a bit on the academic part. We assume most of you here will understand some of the basic concepts, but we're going to be focusing more on the practical challenges, as we call it. They are challenges. They're not, shall we say, they cannot be impossible to overcome, but they're still challenges that we need to be aware of. And what I'll do is I'll take some part of it, and Madzlan will take some part of the presentation. Madzlan is doing a lot of the international Sukuk that we're doing at the moment, so we also have some case studies to make it more lively, 2 case studies from Dubai, and we're doing the Dubai Sukuk, so I think it'll be timely for us to just discuss that. Now, what I'm going to do is basically, these are how we're going to basically conceptualize our discussion today. We're going to recap some basic understanding of the Sukuk, and then we're going to talk about the practical challenges in the issue of satisfying the underlying asset requirements in the Sukuk, case studies, conclusions, and then we'll have some discussion as we go along, okay? And recapping, just to put everybody on the same page. Now, what we mean by Sukuk? Now, a lot of definition generally, but most entities or most people take the one by AUFI, which basically is stated there that certificates of equal value representing undivided shares in ownership of tangible assets, usufruct and services, assets of particular project or special investment activity. Very, very basically worldly, but a more simpler one given by IFSB basically states that certificates that represent the holder's proportionate ownership in an undivided part of underlying asset where the holder assumes all rights and obligations to such assets. Now, a lot of people use the word Sukuk interchangeably with bond and PDS or private debt security, which is fine. I mean, it's very hard. Some people ask me to talk about Sukuk in a specific format, but it is part of our, shall we say, corporate finance requirement. Now, the issue is, why do Sukuk need an underlying asset? Because this is more peculiar to Islamic finance. Because Sharia basically requires that financing should only be raised for specific and identifiable assets. Now, because we don't allow trading of indebtedness, which is what most conventional bonds require, so we don't really allow those Sukuk that doesn't have basic business activity. Now, so all Sukuk return and capital should be linked to assets, and for project finance generated from an assets once constructed, and which is simply not interest-based. Now, this requirement for tangibility has certain implications. Now, let's bring ourselves back to 2008. Some people say that this is one of the reasons why the global financial crisis happened, but I don't think so. But AUFI came out with some statement which required certain review of Sukuk by most scholars as well as practitioners. Now, AUFI reminded us in 2008 that Sukuk issuance have to be backed by real assets. Okay. Now, the ownership should be legally transferred to Sukuk holders in order to be tradable. Now, this in a sense have certain challenges as well. And Sukuk must not represent receivables or debts, except in the case of a trading or financial entity, which basically where you buy a portfolio with standing financial obligation, which means Sukuk must not represent receivables or debts unless it is part of a whole package. And the manager of the Sukuk is not allowed to extend loans to make up the shortfall. All right. Now, I assume all of you understand what Sukuk is. I mean, I'll take that as a given. And guarantees to repurchase the asset and the value of maturity are also prohibited. Okay, except for those for Sukuk al-Ijara. Now, all this basically created among the legal circles, among the industry, some kind of ripples. But essentially, by hindsight, it has helped Islamic finance to be seen in a more positive light, because most, as you're aware, financial crisis, those toxic or subprime mortgages basically did not have real assets. That is why people say, in a sense, Islamic finance was saved from the real shall we say, typhoon or tsunami of the financial crisis, because we had real assets being part of the underlying assets. So that was one of the beauties of Islamic finance. Didn't mean that we were unscathed, because when you have a credit crunch, everybody got hurt, even Islamic finance. To say Islamic finance is not touched at all by the financial crisis will not be correct. We were touched because of the whole global financial system is contagious, but in a sense we were not that really got deep into it. But we'll see later on. There are the case studies that we bring will show you why some of the issues became relevant. Now, we should remember that, just to recap again, there is a difference between asset-backed and asset-based. Okay? Now, according to the IFSB capital adequacy requirement, asset-backed securities, or ABS, asset-backed, not asset-based, are structures that meet the requirement for being an asset-backed structure as assessed by recognized external credit assessment institution, normally rating bodies. So it must be recognized by such rating bodies to be considered asset-backed. Now, in asset-backed Sukuk, I'm sorry I have to read through so that we can all go together, the Sukuk holders will bear any losses due to impairment of the assets. In other words, in asset-backed Sukuk, the Sukuk holders have recourse to the asset and not the originator. So it's asset-backed. The asset itself is basically linked to the transaction, to the Sukuk. And that's the asset-backed societies. Now, for asset-based Sukuk, there are two types. Firstly, Sukuk that utilizes a purchase undertaking from the originator, or regarded as a pay-through Sukuk, and Sukuk that with the guarantee of the issuer, in case the originator default, also termed as a pass-through Sukuk. Now, hence, asset-backed Sukuk imply that Sukuk holders have recourse to either the originator via the purchase undertaking or the issuer by the guarantee. That's for asset-based Sukuk. In other words, asset-backed Sukuk involve full transfer of legal ownership of the underlying asset, while asset-based Sukuk involve recourse to the originator or the issuer, but not the asset. Now, this is all reminding everybody so we're on the same page. Now, where our input is coming from is this. What are the practical implications? I'm not saying they are unsurmountable, but what are the challenges that we have, that we face? Now, in reality, there are practical challenges. Few companies have eligible assets to securitize. That's the reality. Okay? Most businesses, as you know, are highly leveraged, high gearing. Those in the service IT sectors don't even have physical assets. Some of them now they're more, we've seen more assets looking for intellectual property rights as their security. I mean, so this is something which is new, but in reality, most companies do not have assets to securitize. If they have, they're not bothered to go to the bank anyway. Okay? So the fact that they come to the bank because they don't have assets to securitize anyway. So that's one problem that we should be aware of. Secondly, Sukuk investors want exposure to credit risk, but they don't want to have ownership risk. When you buy a Sukuk, you want the exposure to credit risk, but you don't want to really own the property as such. So Sukuk investors normally, those who want instruments for their own reserves, for example, as fixed income securities, and if they want risk exposure, they go to physical assets to buy buildings or boats or whatever. Why should they bother going into a Sukuk? So broadly speaking, Sukuk investors are not interested in having recourse to underlying assets, but they are, because there is no ready market for their assets. Okay? They want to be liquid, so they hold the Sukuk more as a liquid asset. Now, so to recap, they don't have assets to